What's up guys, Crypto Neil here, happy Saturday. In today's video, we're going to be discussing avoiding analysis paralysis. Have you ever felt stuck staring at the charts, constantly second guessing every single move, missing out on massive opportunities? Well, that's analysis paralysis, and it's literally traders' worst nightmare. In this video, I'm going to be going over 2 simple strategies that you can implement to avoid analysis paralysis and ultimately lead to better decision making for yourself and take your trading to the next level. So without further ado, let's dive on into it. Now, the first strategy I want to talk about is limit your data intake. What do I mean by that? Well, just observe this chart for a couple seconds here and you will find exactly what I'm talking about. I just need a couple sippy sips. All right, we're good. Looking at this chart, we can see we have Bollinger Bands, we have 3 different EMAs set up, we have Market Cipher, we have BBWP, RSI. We also have all these different tabs open because maybe we're looking up different traders, watching their YouTube content, maybe we're in the Google News looking up crypto events of the day, or on X or Twitter, or maybe we're just looking at different charts. Maybe we have ETH or XRP, we're studying Bloomberg markets, maybe we're looking at different markets like the NASDAQ or Forex. So ultimately, this strategy is just to limit your data intake, because having all of this open at once just creates this typhoon of information. It creates this endless loop where you're cycling through all these windows, all these indicators, and you're not actually making a decision. You're not actually utilizing any of your techniques you've learned because there's just simply too much going on, and your brain can't process all of this going on all at once. So what you want to do is limit the distractions, limit the data intake, and clean up the chart. So we're just going to do that quickly here by taking off. Let's take off the moving averages because we don't use those personally. And you might find some of these indicators very useful to you, but I want you to focus on picking 2 or 3 indicators. Then use those indicators to back up your trade strategy. And let's go over mine personally, or one that I use, and then maybe you can kind of get the gist of it. So we'll take off Bollinger Bands. There. To me, this is a lot cleaner. So actually, let's get rid of this as well. Here we go. Clean Bitcoin chart on the hourly. We're going to focus on the hourly time frame just because we are day trading, and typically the hourly offers better price movements. I like to look at 4-hour, but if I'm scalping, obviously lower. But anyway, for this video, we're going to focus on the hourly. So here we have a Bitcoin chart. We have the BBWP, Bollinger Band Width Percentile, which is a measure of volatility. And then we have RSI. And now this chart is a lot easier to view. Ultimately, you can get rid of these distractions too. Let's just keep XRP because that's a future example. And now we're just focusing on the crypto market. We're not focusing on any news that could influence the market. And we have just a few select indicators to build our confidence in our trade strategy. So ultimately here, what I like to see in the BBWP is it hit these extreme lows, which is marked by these blue vertical bars, and then expand off of these lows. And when it expands off of these lows, it'll get this cyan color, exactly that I drew actually. It'll be this cyan color to the upside. That leads to price expansion. Volatility expansion leads to price expansion. Where you can get a bias on direction is with RSI and is with support resistance. So we have 2 yellow lines on this chart marking the previous lows and previously where we broke down. So this would be support, this would be resistance. You want to see this expansion, and you want to see which way the RSI is structured. So as you can see in this area over here to the left bottom, or my face is in the way. In the bottom left of the chart, we have RSI below this yellow horizontal line. and we're getting a rejection in price. So typically when RSI is below the 40 read on RSI, price is moving downwards, and when it's above the 40 read, you could get moves to the upside, but we're in a choppy market, so most of it's just consolidating. So ultimately what we want to see is we want to see the expansion. We want to see RSI either above or below this line, which gives us confidence in either taking a long or a short position. And that's it. That's our trade strategy. We have two indicators. We have support resistance. We don't have all these news sources. We don't have all this nonsense clouding our judgment and causing our thoughts to race and cycle, causing analysis paralysis. So that's the first strategy, is limit your data intake. Now, the second strategy, moving on, we're going to discuss is to set clear entry and exit rules. And I don't just mean entry and exits for your trade. I actually mean rules that you have to follow. And whether or not you write down these rules or just live by them, you need to honor these rules that you set, because if you don't, then you ultimately are going to let your emotions overrule your trade system. And when that happens, you're going to essentially close out on trades before you actually want to, and it's going to invalidate your whole strategy altogether. So what we're looking at here on XRP, again, follow my own rules. I'm closing this out because it's a paid indicator that not everyone's going to have. So I just shut that down and only have indicators that you guys all can utilize here. So here we have XRP. Again, on the hourly, we're going to look at what's happening on the chart. Right now we have a series of lower highs and lower lows. We have price breaking out of this downtrend, and we have price back testing where we broke out. So to me, this could be a potential break in the downtrend, and we could be seeing our first higher low in what leads to a higher high, and thus leads to an uptrend. So making clear entry and exits to our trade is what we're going to focus on here. So we have a breakout. Now we're looking for a long, because we think this is potentially going to create an uptrend. So let's say we took an entry right at current price levels, and I'm not saying that's a good entry, I'm just using it as an example. Also, any of what I'm posting here obviously is not financial advice. Take your own trades at your own risk, but this is just an example to set clear entry and exit rules. Now, you're going to hear me refer to R and R. What I mean by that is risk and reward ratio. And when you set up a long position on TradingView, it's going to open this ratio at 1-to-1, meaning your potential loss is the exact same as your potential gain should you have a winning trade or a losing trade. Now, typically, I like to have my risk reward at least 2-to-1. I want to be making more, and I want to be limiting my losses as a trader. So we look at the structure here. We look at the price breakout. We determine that a good stop loss is probably below these last previous lows here. So we're going to raise our stop loss up to just below these previous lows. This right now puts our risk reward up to 1.8, which is pretty good, but I'd like to be around 2. 2 puts us, interestingly enough, right at the old highs in this series of a downtrend of lower lows and lower highs. So now we have a trade with decent risk reward. We have clear entry and exit defined. We have a clear stop loss and take profit defined. And ultimately, this is going to remove any emotional bias you have from the market. Now, some people like watching price action. Sometimes I just like to take a trade and go do other things. So ultimately, having this system in place with clear defined rules allows you to have peace of mind and allows you to have confidence in your system. So this being your trade, if you set this as your trade and walk away from this, you have a defined stop loss. So even if price comes down, it doesn't invalidate the stop loss. It doesn't invalidate your idea. You stay in the trade, and you stay mentally strong so that you can keep going forward, look at other charts and make other trades, take other opportunities. And it avoids getting stuck in over analyzing your trade after you take it, which is another form of analysis paralysis. When you start overthinking trades after you actually set the position, you start crediting the information you originally took down to take the trade. Ultimately, that's going to lead to you pulling the trade. It's going to lead to poor decision making. So step number 2, set clear entry and exit rules. And now, actually, I just want to talk about a bonus rule that I don't think a lot of people are going to know about. And that bonus is to make micro decisions. When you're dealing with trading, let's use a life example. Like, say your goal is to go to the gym. What I mean by making a micro decision isn't deciding to actually get the courage and motivation to go to the gym itself, because that is a big task to accomplish. So making a micro decision is something as simple as putting on your gym clothes. When you put on your gym clothes, that micro decision often snowballs and compounds into involuntarily making the larger macro decision. So putting on the gym clothes leads you to making your pre-workout, which leads you to packing your gym bag, to getting in your car, to getting to the gym. So that one small micro decision of just putting on your gym clothes got you to the gym in itself. So how can we relate that to trading? Making micro decisions is something as simple as deciding you're only going to trade Bitcoin for the day on the hourly time frame. That micro decision allows you to focus in on only trading one asset. It allows you to understand price movements, understand the indicators that you've picked, and allows you to fortify your trade system based on making that one small micro decision in the day. So start small, let those micro decisions compound, just as compound interest works. Let your decisions work in that same manner. So those are my 3 strategies to help you avoid analysis paralysis. So 1, set clear rules. 2, limit your data intake. And 3, make micro decisions that can compound, build your confidence, and ultimately lead to those bigger trades, those bigger decisions, those more difficult ones. So hopefully you found this video helpful. I'm going to be doing more in this Saturday series to help offer day trading tips and solutions, all the way from beginner kind of tutorials to more advanced things. Let me just bring this back up into focus. And if you found this video helpful, smash that like button, give me a follow or subscribe for more trading tips. Let me know in the comments, what is your biggest trading challenge? And maybe I can make a video to help you in your future path in trading, becoming more successful in this industry. So that's going to do it for me. I'm Crypto Neil. I appreciate your time. As always, let's grow together. Peace.